We've been looking at the numbers. Even the volume is high. What's going on here?
Well, people are selling, clearly. I mean, people are going into the market to sell the stock in size. We don't know. We'll never really know if they're company employees or it's everyone else. But people are getting out of this stock really quickly today. And it strongly suggests that the employees of this company have been waiting for the chance to dump their shares, and they're doing it now. That they think that today's price is as good a price as they're going to see for a while.
Crawford, what do you make of this?
Yeah, I agree with what Corey's saying. I mean, basically, you've got people that have been locked up. They're looking at their first possible liquidity event, and they want to take advantage of that. I also think there's kind of a concentric circle here, which is that the expectations got really out of whack for this stock. And at the margin, if you're worried about the revenue growth story, this might be a chance to take something off the table, even if you're not one of those employees. So they're kind of getting hit by that concentric circle of investors who are also taking this as an opportunity to sell.
Now, it's not unusual for companies to slump the day a lockup expires. Facebook, when the lockup expired, they closed down almost 4%. Groupon down 8%. LinkedIn down 7%. Of course, the markets are still open, so we'll have to see where it falls today. Corey, but what makes Twitter any different?
Well, I think what's really interesting to me, I mean, I frankly didn't expect this at all. I mean, maybe
a lot of people didn't expect it. We spoke with Adam Nash of Wealthfront, who manages portfolios for Twitter employees, and he said they weren't going to sell.
He said they weren't selling, so he was wrong. He might have known because he actually manages their portfolio.
He also said the first day a lockup expires is the worst day to sell.
Yeah, well, so people are clearly selling in size today. I think what's interesting here is that Twitter employees, we're in a new era here where, what's different this time? One of the things that's different this time is Twitter employees have had the opportunity to sell for a long time before the IPO. That there was a secondary market for insider shares. Twitter helped to sort of control that market a little bit.
Right, they definitely clamped down.
Well, they limited the ability of insiders to sell before the IPO. But nonetheless, unlike IPOs for the last 20 years, you had an active market in the shares of this security beforehand, maybe even more than Groupon and Zynga, and maybe about the same as Facebook. So I'm a little bit surprised. They also had an earlier lockup where employees could sell to cover their tax bills that would have resulted from the IPO, their alternative minimum tax. So that earlier lockup from February 15th that let the non-executives sell to cover that, there were a lot of shares in that. There were $500 million in shares that came unlocked already. So this really... there's the old saying on Wall Street, there's lots of reasons people sell, there's only one reason people buy. But this does not bode well for what the insiders say and can see about their business.
Right. On that point, Crawford, what does this indicate to you about the future of Twitter 6 months from now, 1 year from now? Can they get the user growth story back?
Yeah, I think this really comes down to expectations. And I think that maybe Corey and Emily, what you're seeing to the points that Corey was just making is that right now, again, this is one of those kind of wacky stocks where people probably jumped in because they knew it, they used it, and with the news we had last week, with the momentum starting to go down, some of those people, maybe on the retail side, started moving away from the stock now, and that's kind of compounded the problem today. Now, going forward, the expectations for growth have to get under control. We believe that this stock is really, this company is really changing the way people engage with media, and it's a large part of the future of media.
That's the key phrase. I mean, that's a company or stock. Totally different things here. And I think that, we're kind of we're tea leaf reading to look at the stock chart to see if it tells us something about the company.
What about the environment, Corey? We just had David Einhorn on Market Makers earlier today talking about a bubble.
Well, and I think, really interesting, a really thoughtful investor who does a lot of work. Listen to exactly what he had to say when he was asked. He was asked about Twitter, and he was asked about the fact that he was short a basket of tech stocks. Listen to what he had to say.
We thought there's another tech bubble, but we said it was an echo bubble. And I'd like to emphasize the echo, meaning it's a smaller bubble. It's not contained with all tech. We're actually massively long tech. Our biggest position is Apple, and then Micron, and Marvell. But we think that there's a subsegment of tech, which is high momentum stocks that have gotten completely out of control in terms of their valuation. And we think that those stocks actually did reach sort of a bubble proportion.
So I think he calls it an echo bubble. When I was on the short side, we would call the and one stocks, not the market leader, the thing that pretends to be. I was looking at a company called Ultimate Software. Software is a service company, 64 times earnings. It's growing. Revenue is about 20%. The company went public, I think, in 1998. That's not a software as a service business. It's just a software business. I think those are the kinds of things he's talking about. And the question is Twitter an echo social media company? Is it the other Facebook, or is it actually its own thing? I think it's unclear.
Crawford, quickly, is it?
I think it is its own thing, and I think we have to get expectations under control, and I think that they can grow from here.